Hi, accounting class. It's another great day to do some accounting. Today we're here in chapter 24, or if you're in spring 2018, was chapter 6 is the closest match to this, but I want you to rely on the online content for the rest of this course. I'm hoping you find this chapter a little bit easier than the previous one. This is basically coming down to decision making. What should we choose? Alternative 1 versus alternative 2 on all these decisions. I'm going to assume you already know what a sunk cost is. Sunk costs are costs that occurred in the past. They are no longer relevant. They include things like the original cost of an asset, the book value, the accumulated depreciation of an asset. They also include fixed costs. We're going to see fixed costs. In the short run, we can't escape from them, so they're irrelevant. It's like the rent in our factory. Even if we produce less units, we're not going to pay less on rent. So fixed costs are also a sunk cost. All the sunk costs are things that we need to ignore. So this chapter is a lot about focusing in on the important numbers and knowing which ones to ignore. Alright, so we have 6 business decisions. Then we're going to see what happens whenever we have a production bottleneck in our process, and we'll deal with that challenge. Alright, let's go and get started with the first example here. This is also going through a formal form here. I'm not going to have you do a formal form on the quiz. All we're going to do is have to decide, do we want to lease or, in this example, lease or sell the asset, and then how much better it is from the option that we chose. How much better, more money do we make off the option we chose versus the other option. I'm going to prove to you on the forms it's right, but I'm not going to do the forms. We're going to focus on this. So we can sell this asset, or we can lease this asset. 2 options, that's it. It's telling us about the original cost of the asset. That's irrelevant. It's the sunk cost, the accumulated depreciation, sunk cost. If you're on paper, cross these 2 numbers out. It can be sold for $275,400, but we don't get to keep all of that. There's a 4% commission. Remember, if we give up 4%, we're going to get to keep the other 96%. So I'm just going to multiply it by 0.96. That's how much money we'll get if we sell it. If we lease the asset, we can get $285,000. Leasing is renting, so if you've never seen the word, it's equivalent to renting. We can rent it to someone else that'd pay us money monthly, and for a total of 3 years, that'd pay us a total of $285,300 for this asset. But there's going to be costs. If we still own the asset, if we're renting it, we're still the owner. Being the owner makes us responsible for all the depreciation, not depreciation, but repair, insurance, property tax, costs like that we're going to have to pay in cash. So we're going to subtract that out. That's $16,500. Notice it doesn't say per year, so that's the amount for 3 years total. But if it said per year, we'd need to multiply it by 3 in this example, but it doesn't. So which option is better? Which number is going to make us more money? This number looks bigger than the other one. How much bigger is it than the other one? We'll subtract the 2 to find out. We'll say it's $4,400.16 better. I'm going to go and prove to you on the form that's the answer they have programmed in here. Their alternative 2 is to sell the asset. We want to lease the asset, so this is going to be a negative number. We would lose money if we sold it. We want to lease the asset. Let's check it. Boom, boom is correct. Alright, we're going to move on to the next one. Try to make this nice and quick. Again, what I recommend is you stop the video, look at the problem, do the problem on your own, figure out which option to choose, and then how much better it is from the alternative, and then I can confirm your answer for you. But what I'm doing here is showing you how to solve the problem if you have no idea. But don't rely on me totally. Stop the video, do the problem on your own, and then use me to check your work. If you can't do that the first time, try the second time you go through it to do that. Alright, product, AG. Alright, discontinue a segment or not. So a segment, this one's losing money. It's losing $14,900, showing a loss of $14,900. Alright. But just because it's showing a loss doesn't mean it's always beneficial. It doesn't mean we're going to save $14,900 from shutting this down. So we may not want to shut it down. What we want to do is take the sales number and subtract out any variable cost. And Excel thinks I'm trying to. Alright, so the sales $193,800. The variable cost of goods sold equals $114,000. The variable selling expenses $33,700. Notice I didn't include the fixed costs. The fixed costs are sunk in nature. Think about it. Whether the fixed cost, imagine we're producing a lot of units on one factory, which because we shut down, discontinue this segment, doesn't mean we're going to save any money on the rent, for example. So this fixed cost, in the short term, it's sunk in nature. In the long term, we could buy a different type of factory or rent a different type of factory. But in the short term, it's a sunk cost. We're going to have to pay this anyways. It's just allocated. This amount is allocated to this product, but it's not really a full cost of making the product because we're going to have to pay the rent anyways. So just discontinuing it discontinuing this operation is not going to save us any money on rent if you imagine it that way. That's why it's not relevant. It's a sunk cost. So that's what to ignore. Most of this chapter is knowing what to ignore. So we get it having a positive, making sure I got the numbers correctly, yes. We get it having a positive contribution margin. Go and add commas of 113,500. I'm not going to prove the rest of this out. You don't need to subtract out the fixed cost. It's not relevant for the decision, but I'm going to show you how they got to the net income. The fixed cost is equal to 61,000. And then their income, this should prove it out. If I didn't type in a number incorrectly. It didn't prove it out, so I made an error here. I was feeling like there's an error. 193,800. Variable cost. Oh, here's where it is. Need to add the two variable costs together because I'm subtracting them in my calculation here. Alright, now we've gotten to the correct number, which is 14,900. Notice it's a net loss, so this is a negative number. But our answer to this question is we don't want to discontinue it. So we don't want to discontinue it if the contribution margin is positive. In this case, the contribution margin, which is sales minus variable cost, is positive. So we don't want to shut it down. The difference, this really is our answer right here. We didn't need the last step except to tie it back to the income statement. So alternative 2 is to discontinue it. We don't want to discontinue it. We want to run the business. So this is going to be entered as a negative number. Determine the product B should be continued, not discontinued. Those two are right. We'll move on to the next one. Give you a second if you want to just stop the video. Alright, let's go and do this. This is a make or buy. So there's a needed part in our business. We can either make that part in our manufacturing or we can buy it from an external vendor. So we can make it ourselves, so we can buy it from someone else. So we're going to compare make versus buy. We're going to be looking at the cost to make it versus the cost to buy it. Costs are negative things, right? They're things we have to pay. So we're going to be trying to minimize the cost here. Manufacturing cost, if we make it ourselves, so it reads like it's $160, but they have a trick in here. It's $160 including the fixed cost. Remember, the fixed costs are sunk in nature. Not like not producing this unit, or if we produce it or not, it's not going to change our rent. Our rent is fixed in nature. So we're going to back the $32 out of the $160. So the cost to make it really isn't the $32. The variable cost to make units is $128, which is the relevant part of it. If we want to buy it, it's going to equal $103 given in the problem, plus $8 of freight to ship it to us. Alright, so which one do we want to do? These are costs, remember. We want to pick the lower number. We want to minimize cost. The difference between the two numbers is 17. And we want to... This is effectively the option we want to choose. Not the text. Highlight. Go with that. We want to buy it. It's going to be $17 better. So that's really all you have to say is we want to buy it, and it would make us $17 more per unit than if we made it ourselves. Is really the answer I'm looking for. Alright, here it's alternative 2 to buy. Do we want to buy? Yes, we want to buy, so it's going to be positive. They should buy. Those two are correct. We'll move on to the next one. Alright, replace equipment. I'll give you a second if you want to stop the video and try the problem on your own. Alright, let's go ahead and get started. This is whether we want to replace equipment or not replace the equipment. So we can keep old equipment or we can replace. I'm going to approach this a little bit differently. I'm just going to think in my mind, hey, do we want this new machine or not? I'm going to say look at the benefits to it, and then I'm going to look at the cost of it. And it's effectively going to be the net cost. So what's the benefit if we buy the new machine? The benefit here, if you read the problem, I'm assuming you already have, you pause the video, the direct cost will decrease by this much per year. So I'm going to do that over here. 49,100 minus 39,300. The amount of savings per year is 9,800, but this is for how many years? 6-year life. So we'll multiply it by 6. The total benefit over the life is this number, 58,800. The net cost of this machine, we're going to buy it for 282,200. It says it right here. But we're going to trade in our old machine. Just like if you trade in a new vehicle, it doesn't reduce the purchase price, but it takes less cash, right? Because you're trading in an asset that you already had. So the net cost, the net cash that's going to take is 214 minus 214,300. So it's really only going to cause us to write a check for 67,900 because we're going to trade in the old machine if we buy the new machine. Alright, so let's look at this. The benefits are, we'll add some commas, make it easier to read. Benefits are 58,800. The net cost is 67,900. That's not good because the cost is too high. So we don't want to buy the new machine. The new machine would result in a negative 9,100. So we want to keep the old machine, and it's better off by 9,100. Alright, alternative 2 is replace the old machine. We don't want to do that, so this is going to be a negative 9,100. Again, don't worry about the forms. I'm just doing that to prove to you I got the right number per the system. Worry about the conclusion and the difference between how much better it is from the option you chose and the alternative that you're comparing it to. Alright, if you want to pause the video and try this problem on your own. Alright, I'll assume you've had time. Let's go ahead and get started on it. Process or sell. So we have the option to process or sell units further. So we can sell this J19 as it is, or we can process it further into this unit called R33. That's going to take additional cost, but the benefit is we're going to be able to sell it at a higher price. So what I'm going to do is look at the total revenue I'll get from J19. There are multiple ways to do this. You can think of your own way and see if it works out. J19 we can sell, it's being produced for $348, but that doesn't matter, that's a sunk cost because it's already cost us that money. We can't get that back. We're already at J19. We're just deciding whether we want to stay at J19 or go to R33. J19 could be sold for $4.07 per gallon. If we process it further to R33, we can sell it for $4.42 per unit. But it's going to take an additional processing cost of 39 cents. So we had to subtract that out. Alright, so the net revenue we'll get from J19 is 407. The net revenue we'll get from R33 is 403. So R19 is better. We don't want to process this further, and it's better by 4 cents per unit. So alternative 2 is we don't want to do that, so this is going to be entered as a negative. I'm looking for units. Sometimes they tell us units in here, but if this is just for a single unit, this is the correct answer. Yeah, I don't see anything about they're talking about units. We should sell product 19. We shouldn't process it further because it produced less net revenue. The other one produces $4.07. The other one, after we take out the cost of doing so, is a lower number. We want to maximize revenue. Alright, we have it right. We'll move on to the next one. Give you a second if you want to pause it. Alright, I'll assume you've had time for it. We're going to move on to this problem. This is to accept business at a special price or not. We normally sell this product A for $50, but someone's offered us $34 per unit on the export market. We're interested in it if we can make money. Let's see if we're going to make money on this deal or not. What we need to do is consider only the variable cost. If we do this, we're going to incur a variable cost of $26 per unit, and we're going to have a variable cost of a tariff. A tariff is something they charge you in international trade for importing from an external environment, an export market. Also, this problem doesn't say anything about fixed costs, but if they include fixed cost, we would want to back that out because it's a sunk cost. Alright, let's go and get started here. We can sell price is 34. The variable cost is 26. And then the tariff, it's defined as being equal to 16%. So what the selling price? So we'll take the selling price times 0.16. And let me go and change it to a negative number because this is money going out. We're going to have to pay that to a taxing authority. Net everything together. Okay, we're still making money. It's still positive. So it would be beneficial to accept this offer in this scenario, and it would make $2.56 per unit. Alright, alternative 2 is accept it. Yes, we do want to accept it, so this will be positive. We should accept the offer. That's it. So these aren't too hard if you know what to pay attention to and what to ignore. That's the major challenge with these problems. It's ignoring what's irrelevant and paying attention to the ones that are relevant. What's irrelevant: sunk cost, historical cost, book value, accumulated depreciation, and fixed cost. Alright, let's get to the one that's different from the other one. This is a production bottleneck. I'll give you a second to try this problem on your own, and then I'll show you how to work it. Alright, so they're producing 3 types of steel: high grade, good grade, and regular grade. High grade, good grade, regular grade. If you read the problem, the furnace hours, this is the production bottleneck. So we're going to maximize our contribution margin relative to this bottleneck. That's all this problem is doing, is maximizing it relative to the bottleneck. The problem, if you read it, tells you it's a bottleneck. So the first step is determining the contribution margin. Contribution margin is sales minus variable cost. So we'll go and step through this. High grade, good grade, regular grade. Variable cost. Now variable costs there's 2 types: direct material and then the conversion cost. So we're going to subtract out the variable cost. We're going to have to calculate it. Now, sales minus variable cost equals contribution margin, just by definition. Alright, the sales price, $291, $246, and $262. The variable cost is going to be equal to the direct material cost, plus, it says the conversion cost is $10 per process hour. Process hours for high grade is 15, so 15 times 10. Now we're going to do the same thing for good grade. Hey, that's what you guys want, isn't it? Good grade. Alright, just a joke. 108 direct material plus how many units are they? Process hours is 13 times the $10 per given in the problem. Regular grade, the direct materials is 97, plus they use 10 process hours times $10 per unit. Alright, now we can calculate our contribution margin, which is the sales price minus the variable cost. Alright, so we should have the answer for the first part. Go and check it. No, what did I do wrong? I'm going to keep my errors in there. We all make mistakes. Sales price $291, $246, $114, $246, $262, variable cost 114 plus 15 times 10. Oh, it's right here. Contribution margin is sales minus variable cost. That's a very easy one. Sales minus variable cost. I had the wrong formula for contribution margin. I wanted to go error free, but I'm not going to try to hide it. You guys make mistakes too. Alright, now we have the contribution margin per unit. The rest of this is easy. What we're going to do is figure out the bottleneck hours. You can call it bottleneck hours. In this case, I'm just going to call it the generic bottleneck hours. That way you can apply it to another problem. If it's not furnace hours, it's something else. So bottleneck hours for the first one is 3, then 4, then 5. So then what we want to maximize is the contribution margin per bottleneck hour. Alright, so we're going to divide contribution margin divided by bottleneck hour. And we can drag that down for each one. We want to maximize it. The one that maximizes it is the regular grade. If it asks you, regular grade would be the one that maximizes it. Alright, that's it for the problems. Again, make sure, try to pause it so you can get the practice on your own. You'll get used to the language here and the problem solving, but this one should be easier. You're just comparing two alternatives for the 6 business decisions. Most of it's knowing what to ignore and what to pay attention to, so it does take a little bit of practice. But I hope you find this one a little bit easier than the time value of money chapter that we covered previously in the net present value. I'll see you guys next time for the next chapter. Alright, bye-bye.